Nick Morgan is the co-founder and managing director of Opportunity Private Capital. And Nick is going to join us today. You know, we like to find out about all the different options that you can move your money into different investments. You can put your money into different areas. And Nick is going to help us understand the different opportunities he has for money. And obviously, this is a time where people are looking for ways to turn, what they've got into a whole lot more. And I think for many people, the objective is to consistently provide a place where they can get attractive fixed returns. Everybody wants that, but they also don't want to risk the invested capital. So they want to put that into something that will make sure it grows over time. And Nick Morgan is here to tell us more about this. So Nick, welcome and happy Friday. Can you start off by just telling us about who you are and what you guys do?
Gareth, morning. Good to see you. I see
nice.
I see the old 5FM team is at full tilt. You're losing Leanne to Tesla, I got to tell you. she's on her way to join Elon Musk.
Yeah, she's basically a bionic at the moment with that sleeping Jesus. Anyway, so tell us about you, Nick, and what you guys do, because I'm always curious, and I know our audience are too, about where money is going and what you might be able to do with your money. But tell us about Opportunity Private Capital and also about you.
There was an opportunity in the market for private individuals to be able to get access to the funding of residential developments, because at that stage, where the background I came from and his as well, it was mostly institutional financing that did these projects. So we started off many years ago like that, and we've now got to the stage where we present a secure asset-backed structure for private individuals or private investors to get very attractive returns by funding residential property developments.
I have noticed that there are still lots and lots of developments going up, and obviously people need housing. And pretty much in any neighborhood, certainly in Gauteng, people will say that there's always something being built, right? And people need affordable housing. They need to climb the property ladder, and therefore these properties are being snapped up left, right, and center. And developers are putting up, bigger buildings with more space, more units. It's happening everywhere. It's plain to see.
Yeah. So Gareth, you hit. I think the lower income to middle income sector is just growing exponentially to a certain extent, and so that demand for housing is not going to abate at all. I mean, I remember actually I was driving home a few months ago, and I heard John Luce, who's the FNB economist, he's on the Money Show, I think, with Bruce Whitfield, and he mentioned that. He was talking about the difficulties in the commercial and retail sector at the moment, in terms of where they're going to find their space given COVID, etc. But he said the residential space, especially in that sector, is people need more and more housing, and we're seeing that because last year, and we'll go into this maybe in detail, but last year the residential sector was pretty buoyant. It didn't suffer at all, and we can go into the reasons why, but it was very active.
That's interesting. I didn't know that because I would have assumed the opposite was true. So you say it's resilient. Is that because maybe people realized, like, working from home, they actually need to have a home more than they need an office, and perhaps some people were in the position where they could put some money into that, and they realized, like, this is how it's going to be for a while. Did that have something to do with it?
Yeah. So Gareth, I think you've hit the nail on the head. So there was a confluence of events, I think, that took everyone by surprise. And I think the first thing is, although a lot of people fell out of the market because of job losses, etc., a whole rung of new people came into the market in terms of first-time buyers. Because when I say a confluence of events, I've never seen it in my history in property, which is a very long time. Is for the first time ever, the banks and the Reserve Bank all played ball. And what I mean by that is the interest rates came down substantially, and the bank's appetite for lending increased. And for us in the property sector, it was a hell of a interesting phenomenon, because what that meant is that people who are renting up to that stage suddenly could afford the bond repayment. So there's a huge glut of first-time buyers coming into the market, which I think is propping it up. And of course, the interest rates is helping. I think a lot of investors are jumping in as well. I think there's a big move towards fixed assets, Gareth, because the markets were so turbulent last year. People have gone back to that tangibility, I think, of bricks and mortar.
Yeah, I think that's probably a very good point. Of course, for many people, property is still too expensive. Many people rent, but essentially the rents are almost equal to the kind of repayments that you would have on a bond these days, right?
Yeah, yeah, that's exactly right, and I think that's the appealing factor. So the guys are spending the same amount of money on a monthly basis, but at least they're doing it for themselves now, and they're not paying the rent to a landlord, so to speak. So